Good morning, beautiful people. Welcome. We're here. We're back. It's Hump Day. It's the Premarket Prep session. We're going to be going over all the important news, notes, analysis, information necessary to make sure that you're on the right side of markets. And I'm excited to get to that here today. Luckily, we don't have pretty much any major economic data dropping, so we don't have to worry about anything kind of messing up what the technicals have for us. But we do have Nvidia with earnings after the bell, which is going to be huge, right? I think they said yesterday that it was like the most traded stock on the stock market. Everybody's placing their different bets, and they're going to be involved. And we've also just got QQQ and SPY at like really important spots, right? QQQ lost the daily uptrend on Friday, and it can move to retrace that here today. SPY, held the daily uptrend yesterday, but barely. So it's like if Nvidia reports and does well, then the Nasdaq can recover and SPY can maintain the uptrend. If Nvidia does badly, then maybe we see SPY lose the uptrend along with the Nasdaq. So we're in a very delicate spot this week where we have a lot hinging on a stock that has been pretty much the darling of the stock market over the course of the past year and a half because of AI, and AI being the new hot thing, and frankly something that's already changing the world and will continue to change the world. So that just means this week is just like a kind of a weird week, right? A week where we're kind of waiting around to get that data, get that information, and then the market can be kind of free and clear to do what it wants to do from there. But we're in this like super high tense inflection point where it's like we could either bounce and continue higher and everything is good, or we just lose it and drop it like it's hot, right? And we're in a position where we can sell off, reasonably, given the fact that we've been going up pretty much all of January and February. So that's really where we're at in terms of like, kind of market sentiment and a synopsis of what's going on. We're at a very important point, in this battle between buyers and sellers where, this person showing up or this person not showing up can make a world of difference. So I'm excited to see what they have to say in terms of reporting. Everybody has fierce opinions on it. Some people are like, hey, they're going to miss and it's priced in, or, all the upside is already priced in because the stock is so high. So everybody's got an opinion. At the end of the day, right, the only thing you can do is make sure you manage your risk in order to not have a lot of risk out there and then just navigate the aftermath. But good morning, everybody. Right, I dove directly into things. If you are running a little bit late, just watch the replay. You can catch all that good stuff. And I'm sure this isn't the last time I'll be talking about Nvidia over the course of this session. In fact, it's probably our headline news. But other than that, guys, let's look to have a great day. Let's dive into it. What we got going on today on this short week. Feels like Tuesday, but it's Wednesday already. Our top news here, make sure again that you're throwing your one in the chat. As always, you want to signify your intention to get 1% better. That's what we're trying to do here each and every day. Commitment beats talent. Commitment beats everything else, right? Committing to something and doing it over and over and over and over and over again will help you accomplish your goals. And it's just as simple as that. So being here and being, steadfast in that commitment is huge. In terms of our top news, the AI trade, right? We're starting with good old Nvidia. Get ready for the big show. The most talked about stock in the financial world is set to report earnings after the closing bell on Wednesday, with big bets taking place before the closely watched results, outlook, and accompanying commentary. Nvidia's impressive returns have not only been limited to the stock, but have been a big force behind the AI frenzy that has helped power the broader market, the Magnificent Seven in 2023 and beyond. By the numbers, Nvidia's consensus estimate, EPS estimate for Q4 comes in at $4.63, which is a 426% year-over-year increase. Wow. With a revenue forecast of $20.5 billion, which is a 236% year-over-year increase, up from $6.1 billion in the prior year. Sheesh. That's a staggering difference, with the AI darling now making nearly as much revenue per quarter as it used to do on an annual basis. Nvidia's stock has reflected these major gains, quadrupling over the past year and up 40% year to date to about $700 per share. It's also led Nvidia to recently become the third largest U.S. company, as well as topping Tesla to become the most popularly traded stock on Wall Street. So, I mean, at this point, like, you can't get more exuberant than what we are seeing on Nvidia. Passing Tesla as the most traded stock, as the third most viable or largest U.S. company. It is just it's been the forefront of the stock market. Second half of 2023, all of 2024, and they've got crazy numbers and expectations to live up to. Now, if there is a company that can do that, it's them. And it's, yes, part of it is based off of what they do, but most of it is based off of AI and the AI craze. Every major company, from Walmart to Apple to Amazon, to even freaking apparel companies, right, have to invest in AI at this point, which means that they need Nvidia chips. So it's something where it's like it's great timing for them, and it's shaping up, to be an amazing thing. But it's one of those things where it's like it could really go either way, because everybody has had to be like order these chips nonstop, right? It's just been ordering all these chips, and can they keep up with it? Is there some type of bottleneck? There's just a lot of different questions, and it's not like they've hit every single earning since they have blown up, right? There's been times where they've missed. There's been times where the stock has not moved that much. So you don't want to just say, oh, they're an amazing company, they've got to do well for earnings, let me go buy calls. That's not the case, right? That's not the case at all. You can beat on the top line, beat on the bottom line, and the stock still do nothing. You can beat on both lines, and the stock still drops. So going into this, don't ever put money on earnings that you wouldn't be fine flushing down the toilet, because a lot of people see Nvidia earnings or Tesla earnings as their, ticket out. I'm going to pay off my student loans by doing this. And in reality, all you did was likely waste a few grand on absolutely nothing. So if you have it to waste, awesome. If you don't, earnings is not the way, right? That's not your meal ticket out. If there is any guide to how shares will trade after earnings, keep an eye on forward guidance. If more exponential growth is in store for Nvidia, the stock may continue to rocket. But if there are signs to the contrary, the reaction might be more muted or even go in the other direction. Going into earnings, Nvidia suffered the largest daily loss of market cap in its history. But with a market cap of about 1.7 trillion, even a 4% move can allow those numbers to make headlines. Another item to watch on the earnings conference call will be comments made about trade restrictions, with the U.S. putting sanctions in place on GPUs like the H100 or rising competition from other companies. Check out some commentary from Seeking Alpha analysts below. So everybody's just got their different, take on things. But that's important to realize also, right? Stocks don't have to run into earnings. Nvidia had its largest daily loss in market cap history, right, yesterday. And heading into earnings. So in terms of like something having to push, it doesn't have to be bullish leading up to earnings. It doesn't have to be bullish if it gets good earnings. And there are just a lot of variables, right? A lot of variables and a lot of risk that are surrounding this event. So this, let's see here. This analyst says, buy NVIDIA's ability to deliver on promises and exceed expectations, coupled with an unprecedented competitive advantage, means this stock can likely continue rallying despite high valuation risk. That's Seeking Alpha analyst Christopher Robb. Another quote, the mechanism for the internet crash around the turn of the millennium was valuations getting ahead of earnings. However, the young AI revolution essentially solved the opposite problem for its most fortuitous beneficiaries like NVIDIA so far. Earnings have gotten ahead of valuations in this stock market's darling case, which is a valid point to make, right? In the dot-com boom and bust, that was definitely the issue, was before any earnings or anything was shown to back this up. All of these companies were given these crazy valuations. So you're saying these internet companies are worth this much, but they haven't shown that in terms of revenue. Whereas NVIDIA is making a crap ton more money. They are getting a bunch more orders, right? So we do have the earnings coming with the horse before the cart, like it should be. This analyst says, sell. NVIDIA's lead times for GPU orders have decreased from 8 to 11 months to just 3 to 4 months, indicating a potential future sequential growth peak. Investing group leader Paul Santos notes, having ascended to the third largest market cap in the U.S. markets based on discounting ceaseless growth into the future, caution is certainly warranted, as there's clear risk this ceaseless sequential growth will cease in the near future. And then here's someone who recommends it as a hold. NVIDIA can be hedged with protective puts quite cheaply now in relation to its stock price. Although Nvidia has fantastic growth and a wide moat, that doesn't mean the stock is worth, let's say, 10 trillion. Any series of future cash flows is finite, which means asset prices are finite as well. So this is just three different, kind of positions all in the same stock. But at the end of the day, there's so many different things you could theorize going into earnings that it's not really worth it, right? You could sit here and you could have multiple points for the bullish case, multiple points for the bearish case, and all you're really going to get is like a bad headache and no brain power left or mental capital to do the rest of your work. So I wouldn't be sitting here wondering, oh, what's going to happen with it. I'd make whatever trades or, I guess whatever trades are high probability to make today, and then just swing light into tomorrow and wait to see what we get, and then execute based off of what we get after that. For other earnings news, Walmart recap: Walmart climbed 3.2% to a record high on Tuesday after topping estimates with Q4 results amid e-commerce sales that jumped an impressive 23%. So we got people going online buying from Walmart, doing pickup, all that good stuff. CEO Doug McMillon pointed to slowing deflation trends during the quarter, with inflation stickier than expected, meaning more shoppers led to increased revenues, not prices. Meanwhile, Walmart declared an annual dividend of 83 cents per share on a post-stock split basis, or $2.49 a share on a pre-split basis, a 9% increase from last year. So that's nice, declaring an annual dividend. The retail giant also confirmed that it would acquire TV maker Vizio for $11.50 a share in cash, or around $2.3 billion. Wow. Walmart making moves into the, tech sector. I wonder if they'll start coming out with specific Walmart branded things or not. I feel like that would be interesting. Let's see what else we got going on here in terms of stock news. Dow shakeup effective February 26th. Amazon will be added to the Dow Jones Industrial Average, replacing Walgreens Boot Alliance. This was news I was not expecting. The change reflects the evolving nature of the economy and was prompted by Walmart's 3-for-1 stock split, which will reduce its weight in the index. Elsewhere, Uber will be added to the Dow Jones Transportation Average, replacing JetBlue, to increase exposure within the index to the ride-sharing industry. The shakeup sent Amazon and Uber up around 1% each in after hours on Tuesday, while Walgreens fell 3% and JetBlue slipped marginally. Yeah, I mean, Amazon and tech companies are something you really think about when you think about the Dow Jones Industrial Average, but we are having some turnover when it comes to what constitutes that average. And this is something that manifested nicely for Amazon. It kind of makes sense as well because Amazon was something I was peeking at yesterday, and there were some like March, April calls coming in for Amazon, but the chart didn't really look like it justified that happening. So I was kind of like, what is the reason here for this action? And it was likely some insider trading with this news set to drop after hours, which it did. So just another, instance. People are going to get to the bag. Just make sure that you're getting to it as well. I'm not worried about people insider trading. It's going to continue to happen. I just want to be able to ride the wave of the same moves. In terms of automation news, robot deliveries embarking on a new international drive. Uber is inking some new partnerships to begin delivering food using autonomous robots in parts of Tokyo. Cartkin's Model C robots, which use AI and computer vision technologies to navigate sidewalks, will be used in the venture, with Mitsubishi Electric supervising the operations. Uber Eats and Cartkin first partnered to launch autonomous delivery services in parts of Miami, Florida in 2022, which then expanded to Fairfax, Virginia. Uber Eats also has similar partnerships in the U.S. with robotics firms Motional, Neuro, and Serve Robotics. So I think that's fun. I mean, I think that integrating robots in different arenas is cool. I think that eventually it'll cause these companies to save money. And Uber is a company that's looking to go all autonomous. It doesn't want to keep paying drivers who need benefits and this and that and the third, right? They have to deal with lawsuits because people can't stop hitting on their Uber drivers, or Uber drivers can't stop kidnapping people. People are a liability, frankly, when it comes to business. And especially business that is like super like A to B, right? I need food picked up from here and dropped off here. Or I need a person picked up from here and dropped off here. That's something that like a robot can very, very easily do. So and the most that they could phase people out, the better for Uber, the better for their bottom line, and the better for them not having to deal with lawsuits and stuff like that. So yeah, I feel like Tokyo is the perfect place to try it. They already integrate a lot of robotics in Tokyo, so I feel like people will be used to it, and it'll be fun, right? And nice little novelty news here this morning. Um, in terms of today's economic calendar, like I said, pretty light. I can't check and see where we are in relation to what we have going on with today's markets because I don't think they're swim up yet, but I'll check on that soon. Today's economic calendar, we've got to remember the Fed speaking at 8 a.m., not super important. No, another one at 1 p.m. We do have Fed minutes, though. We have Fed minutes at 2 p.m. So that's something to keep an eye out for. But again, it shouldn't be anything that is like super impactful because it's just the notes from the last meeting and we don't have Powell speaking. I'll double check that, but yeah, it doesn't say that we have that here. You can also check online. Is Jerome Powell speaking today? Because last time he was like sneakily speaking and it snuck up on us. Normally it's announced. Let's check. I don't believe so. Nope, not looking like anything today other than those two Fed speakers that I mentioned. So we shouldn't get Powell today, which is nice. Don't have to worry about that. And we can wrap up here with our rapid fire bullet point rundown. So what else is happening? U.S. House sets up task force to explore legislation to manage AI. Palo Alto Networks plunges after cutting billings and guidance. Bezos offloads more Amazon shares to cap off stock sale plan. Occidental, ticker Oxy, explores potential sale of Western Midstream. Home Depot falls after U.S. comparable sales growth disappoints. And then Ford, ticker F, cuts prices on Mustang Mach-E in a bid to boost sales. Solar Edge, ticker SEDG, sales guidance comes in far below estimates. Report PE interest in Sanofi's $20 billion consumer health unit. And that's private equity, right? So people looking to invest. And then Realty Income, which we've been watching, post mixed earnings, guidance comes in slightly soft. Then Chinese banks approved $17 billion of loans for whitelist real estate projects. I feel like if anything, China should have learned its lesson. Stop investing all of this money in real estate projects when you don't have people that are there to purchase the real estate once it's built up. That is what led to this crazy Evergrande crisis and why China has struggled so much over the course of the past 2 years and looks to continue to struggle. You just can't go build a bunch of stuff and you got nobody there to live there and to buy it up. So that'll wrap us up here on this fine hump day. Let's finish this week strong. Continue to put one foot in front of the other. Look for quality opportunities and execute when the time is right. Other than that, everybody have a great rest of your day, and I'll see you back here tomorrow morning for our next pre-market prep session. Let's see what NVIDIA has for us. Peace.